Good evening, everyone. Okay, I'm really sorry my other live was not working. So this is hopefully is working. Is my audio and video clear? Okay, I hope all of you guys are able to hear me now at least. Can someone confirm me whether my video and audio are clear? I'm again sorry, please share this new link. My old link would not work. This link you can share it with your friends and tell them that I'm live again, and then we're going to do the rapid revision marathon session on few very important topics for your tomorrow's examination, and specifically requested by a lot of students. I'm going to cover those areas, and that's the plan. So immediately if you could share it out to your friends and ask them to immediately join, then we can start off with our session. Alright, so I guess I can't wait for any longer, so I'm just going to start off, and we will let people to catch up in between. Okay, so what are the topics that I'm going to discuss in the session now? I'm going to discuss precisely 3 chapters. Okay, so that's the plan, that's the time that I've allocated till 8 o'clock. We will try to get a quick review of certain topic by 8 o'clock. And I don't want to see, I can always go on and then discuss the whole thing for another 5 hours also, but that's not important. You have to know what is specifically important for your tomorrow's examination. That specific points is what I'm going to cover, and whatever can be tested in the examination that I think would be important. Chapters that I'm going to cover is return chapter, payment chapter, and charge. Whatever is possible in charge will be the thought process that I have kept for myself, and a quick recap. Okay. So once again, if you don't have the notes, ensure that you download and then keep it with you. If you have my chart notes, ensure that you keep it with me, with whatever notes that you have, keep it open, and then let's get started. Okay, so the first thing that we're going to discuss is returns. So if you look at return, I have discussed this in 2 separate areas. Okay, one is, it is there in ITC chapter. So if you look at ITC chapter, I have mentioned about the return structure there in details. Okay, so look at this. Now you have to first understand the basic return that is applicable in GST. This will be somewhere tested in some kind of a format. That is, there are 2 return mechanisms that is available in GST. For a regular taxpayer itself, he can either go for something called as QRMP, quarterly return monthly payment scheme, or go for a regular return structure. When I say regular return structure, I mean he can go for monthly returns. Monthly, how many returns? 2 returns on a monthly basis. Which are those 2 returns? GSTR 1 and GSTR 3B. What is the due date of filing GSTR 1? 11th of subsequent month. Again, please remember for your examination, it is 11th of subsequent month. That is, for January, you file the return on or before 11th of February. Okay, so which return? GSTR1. What is that you file in GSTR1? Your details of outward supply. Okay, this is the structure that we have. Then your payment of taxes is generally linked with a return called as GSTR3B. So if there is a question like, is your payment aligned with the return? Yes, generally for everybody except for certain people. Like say for example, composition levy scheme. They don't have payment aligned with your returns, right? Because in composition levy scheme, you have a financial year return, you make the payment by a separate form. But normally people make the payment together with GSTR 3B. It is aligned with it. So 20th of subsequent month is the payment, and generally what is the periodicity of making payment? Monthly. Now, is anybody having a quarterly payment? Yes, only one person. Who are those persons? Composition levy scheme. People who have opted for composition levy scheme, they can go ahead and then file their returns. Their return is financial year. Their payment is actually quarterly payment. They have a quarterly payment system. Then, now, if they are not under composition levy scheme, okay, so people who are not under composition levy scheme, people who are not NRTP, TDS, TCS, IST, e-commerce operator, OIDAR, all these people have separate specific return. All others will go ahead and then do monthly payment, and they have two options for returns. One is go for monthly returns or go for quarterly returns. Now they have a scheme called as QRMP, and who will get QRMP? If their previous year aggregate turnover is less than or equal to 5 crore and they opt for this QRMP scheme. If they opt, they can do monthly payment and then quarterly GSTR1 and GSTR3B. But if they are opting for QRMP only, they'll get this. My turnover is 2 crore. If I don't opt for QRMP, I will go ahead and then do monthly GSTR1 and monthly GSTR3B. This is the structure that you have to remember for returns. Now, if I'm doing monthly, I've already told you the due dates. Now, what if I'm doing a quarterly GSTR1 and quarterly GSTR3B? If I'm doing quarterly GSTR1, 13th of subsequent month from end of the quarter, which means April, May, June is one quarter, right? All this put together, they can file a GSTR1 on 13th of July. This is the structure. Understanding? Okay. Now, GSTR3B is depending upon state. It can be either 22nd of the next month from end of the quarter, or it can be 24th. Now, how do you understand whether it is 22nd or 24th? You have to look at which state they belong to. Now, how we are going to understand this is, we are going to divide the states into a different category and then explain you this. It's a very simple understanding. See, look at this India's map. You can say that the line that I have drawn, okay, the line that I have drawn starting above Gujarat, above Madhya Pradesh, above Chhattisgarh, but below Odisha. If this line, what is it this line represents? All those states coming below this line will have a due date, which date? To be 22nd for GSTR 3B if they opt for QRMP. 5 states in south, Kerala, Karnataka, Tamil Nadu, Andhra Pradesh, Telangana. 2 states in central India, one is Chhattisgarh and Madhya Pradesh. 3 states in west side of India, Goa, Maharashtra and Gujarat, all 22nd. All those union territories under that is also 22nd. One examination they asked this as a question. They asked Uttar Pradesh, what will be the due date of filing GSTR 3B if they are under QRMP? It will be 24th of next month from the end of the quarter. Okay, that is the understanding that you need to have. Okay, now, so 5 south, 2 central, 3 west, and all the union territories under that. There are 4 of them: Pondicherry, Lakshadweep, Andaman, Daman, Diu and Dadra Nagar Haveli. All others 24th. This is the first and foremost thing that you have to learn in returns. Then coming back to the other areas of QRMP. Now the next thing that we have to look at QRMP is that, okay, this QRMP is one area that they're asking questions. Okay, so almost last 3-4 examination there are some question or the other from QRMP. So you can't go to the examination without knowing anything about QRMP scheme. It is quarterly return, monthly payment. Payment remains the monthly, but you can file a quarterly return. Your turnover has to be less than 5 crore in the preceding financial year. The option available for quarterly GST are 1 and 3B. Now the major important point here is it can be opted GST network wise, sorry, GST identification number wise. So you can actually opt for this on GSTIN wise. Now there is a comparison that you have to make between composition levy scheme and QRMP scheme. Let's try to understand that. Okay, this is the comparison that we can look at. You will understand both of them very easily if you look at this comparison. Now, what is the difference between QRMP and CLS? What if that theory question comes in? First one, QRMP is only an easier method of filing your return, wherein composition levy scheme is a option for you to pay a concessional rate of taxes. So in QRMP, you have normal return like GSTR1 and GSTR3B. Only thing you file it on a quarterly basis. In CLS, you don't have 1 and 3B, you just have GSTR4 and you file it on quarterly basis. Now, payment of taxes in QRMP is still monthly, but in composition levy scheme, it is quarterly payment. Tax rate for QRMP is normal rate only. But in CLS, you get concessional rate of 1% for manufacturer, traders, 5% for restaurants and 6% for services, 10-way. Now, can you opt QRMP on different branches, one branch under QRMP, another branch under normal? Yes, you can do that. It can be opted GSTIN wise. Now, what about composition levy scheme? It should be opted on a PAN level, which means once you opt composition levy scheme, it has to be composition levy scheme for all the branches. This is the understanding. Next one. Okay. Now, can I opt composition levy scheme quarterly basis? No. You are opting it on a financial year basis, but QRMP can be opted on a quarterly basis. Now, when can I opt it? There is a condition that you need to satisfy. You should have filed previous month return. You can continue it for subsequent quarters. You don't have to keep opting for it until it is revised or you become ineligible. From what date to what date you can opt for QRMP? You can start opting from first day of second month of previous quarter till last day of the first month of the quarter for which QRMP is sought. How do you understand that? Say, Raju has two branches, Kochi and Bangalore. Can he be under QRMP for Kochi and then normal for Bangalore? Yes. Raju has an aggregate turnover of 3 crore, so he wants to opt for QRMP, but he did not do for the first quarter. Can he opt for the second quarter? Yes, he can do that. For the second quarter, from what date to what date he can opt? Starting from the previous quarter, first day of the second month. So if I am opting for second quarter in a financial year, which means first quarter is April, May, April, May, June. Second quarter is July, August, September. So for July, August, September, if I want to opt, I have to start it from previous quarter second month. So previous quarter means April, May, June. Second month is May. 1st of May till end of first month. What is the first month of the quarter in which you want to opt? July. So from 1st May 2022 till 31st of July is what you can opt. Should I opt for the next quarter also? No, unless you replace it, it will continue as QRMP for the next quarter also. Now there is something called as invoice furnishing facility. Now this is applicable only for, this was asked in the last examination, so not very much expected to be a theory question in this exam, but you need to have an idea. We don't know whether it can be tested in case study or something like that. Okay, so IFF is an optional option for first and second quarter of the QRMP quarter. So the third quarter you don't have a problem, because on the fourth month, which means the next month from the end of the third quarter, you anyway have a return to file, so you can upload all your invoices. But for the first month and second month, so for example April, May, June, this quarter, for April and May you will upload the details only in July on or before July 13th, that is your due date for GSTR1, and some of your customers might want it to be uploaded on the next month itself. So for that purpose, for the first month and the second month, for April and May, you have an option to upload your invoices. Which invoices? B2B invoices, using invoice furnishing facility. It is optional for first and second month of a quarter. Invoice of outward supply can be uploaded from 1st to 13th of next month. If you don't do that, you have to upload all the 3 months in the quarterly GSTR1. You can upload up to 50 lakh monthly value using this. Details of outward supplies furnished in IFF. You will furnish inter and intrastate B2B invoices, debit note and credit note against such invoices. Only B2B, because this is to ensure that your customer takes the proper credit. Next question we had was, can I revise GST returns? No, that is not possible. You cannot revise. You can only make a rectification of errors using subsequent returns. Till what month I can make a, there is something called as amendment in a column, wherein you can actually use that particular method to rectify your previous month errors. Now, when can I do it? Like for an April month of a financial year, if I made a mistake, I did not include some invoices, or I included an invoice number was incorrect, GST number of my customer was incorrect, some amendments I have to do. You can do those amendments till next year 30th of November, or date of filing annual return, whichever is earlier. The same time limit that we have seen in 16.4 for claiming ITC on invoice or debit note, as well as we have seen in 34 in case of credit note, what is the last date in which I can declare credit note in an return. So same time limit is applicable even for rectification of errors. Now if you don't make any supply, when I am saying I don't make any supply, it should be 0 or nothing to be filled for any of those table in a return. Such kind of return, if there is nothing to be filled, such kind of returns will be called as nil return. So if I have some ITC to be claimed, I won't call that particular return as nil return, right? So those returns where I have nothing to be filled will be called as nil return. And if I'm filing nil return, I have even an option. So there is no way that you cannot file any return and then go ahead. Even if you don't have any supply, you have to file nil return. This can be filed using SMS facility also. We understand that in QRMP scheme, even though I go ahead and then do something called as quarterly return, I still have to go and make monthly payment. And what is the due date of making payment? Generally it is 20th, because that is connected to 3B. But in a QRMP scenario, for the first month and second month, there is no 3B. So what is the date and what form I will use to make the payment? I have to make the payment using PMT 06. Which date? For the first and second month, I will do it on or before 25th of the subsequent month. But for the third month, I anyway have a 3B coming in the next month. So I will make the payment using the 3B. Now, how will I make the payment? They said to make the payment, you have an easier option. What is that easier option? They said you have two options of making payment. Normally, how people make the payment in GST, normally payment is made by using a method called a self-assessment method. Please note, in an examination, they have never so far asked any questions on computation of taxes on QRMP. This is not a tested area. If they want, they can ask you that. It's a very simple answer if they ask it. They're saying that there are two options for which month? Only first and second month, please note, because third month anyway you will have to compute your actual taxes and then pay. For the first 2 months, you have an easier option of making payment. What is that easier option? Either you can go for self-assessment method or you can go for fixed sum method. Let's look at what is self-assessment method. Self-assessment method is the method in which you normally make payment. How? Your net to GST liability is nothing but outward tax liability minus input tax credit. However, fixed sum method is a method wherein what do? You actually make an easier payment wherein you don't have to do any computation. What do you mean by you don't have to do any computation? It means that for the first 2 months, what you do is you look at what was your tax payable in the previous month or quarter. So if the previous quarter you made monthly payments, take you were not under QRMP. Say for July, August, September you are under QRMP. For April, May, June you are making monthly payment. Then whatever you made payment in June, you repeat for July and August. In September, after end of September, you recompute everything and then pay the balances in September month. This is called as fixed sum method. But what if last return was a quarterly return? You don't know what was there for June, but you know what was there for April, May, June put together. Then they say, like, let's take 1/3 of it, that is 33%, but let's round it off, let's take 35%. If the previous return was quarterly, you end up paying 35% of the tax paid in the last quarter for the first month and the second month. Okay, I will give you an example so that this, if it is asked as a number based question, you have some kind of an idea. Look at this example carefully and we'll take only a minute to explain you this. QRMP method for payment of taxes, 1st April 2022 till 30th of June 2022. This is quarter 1 in financial year 2022-23. Assume you are under QRMP. Okay. And for April and May, you decide to go, you have two options. One is fixed sum or self-assessment. You decide to go for fixed sum. How do you compute what is the tax to be paid for April and May? When should you pay? 25th of May for April and 25th of June for May. Now, fixed sum method says you have to check what happened in the previous quarter. What is the previous quarter? It is Jan, Feb, March. In Jan, Feb, March quarter, you are under quarterly payment. Then you have to look at what was your quarterly amount GST paid for CGST, SGST and IGST. Say quarterly GST was 1 lakh, SGST was 1 lakh, IGST was 2 lakh. If the previous quarter was under monthly, then we take exactly what paid on March and then apply that. But this is under quarterly. So now what should I do? For April and May, I will pay 35% of this, which means for April and May, I will pay CGST of 35,000, SGST of 35,000, IGST of 70,000. I will repeat that in May also. And I will compute what was actual payment in June. Assume I would have paid April, May, June, actual was put together 2,40,000, 2,40,000 and 5,50,000. This was the actual. But I would have already paid 35 for CGST, SGST in April and May and 70 for IGST in April and May, right? Now I will reduce this and balance I will pay in June. This is what I should do in case of fixed sum method. I hope this is clear. Can I have a quick yes on the chat box if it is Clear for all of you? Okay. Now, please note, you don't have any interest if you have paid lesser than actual in the first and second month. You have only interest if you delay the last month, or I can say quarterly payment. If you delay, then only you have interest. Then there's a change in this GSTR 5. So this, if they want, they can ask us a 2-mark question because there's a slight change here. Now NRTP, CTP will file, casual taxable person will go ahead and then file the normal returns. Okay, I've explained about CTP, NRTP in the previous marathon itself yesterday. But normally NRTP and CTP, okay, NRTP and CTP will be having a special registration, right? CTP will go ahead and then file normal return called as GSTR 1 and 3B, but NRTP has a special return and that's called as GSTR 5. Like very similar to your GSTR 3B, it's also a monthly return. When should I file this monthly return? It is earlier of 13th of next month. There is something they have added here. What is it? 7 days from expiry. That's it. 7 days from expiry or 13th of next month, whichever is earlier. That will be the due date of filing GSTR 5. One of the examination they had asked about due date of filing final return. So likewise they can ask, or they can frame a question saying that somebody came from abroad to here, took an NRTP registration, or they can ask what registration do you suggest for them, what kind of return they have to file, did they file it on time, and all that can be a question. GSTR 10 is nothing but final return. Now this final return is filed when you surrender or cancel your registration. When should you file? The moment you hear cancel, we should remember we will have the word later, not earlier. So see, you can see whichever is later. From what date? 3 months is what you can take to file GSTR 10. Date of cancellation or order of cancellation, whichever is later. From there, 3 months time you will get to file this. And if you don't file this, you have a late fee. That is, it is 200 per day up to rupees 10,000 max. This is total, which means it will be 100 per day in CGST Act, 100 per day in SGST Act, up to a maximum of 5,000 in CGST, 5,000 in SGST. This is the understanding that you have for late fee if you don't do this on time. Now 86B is something that everybody has to remember because it's multiple examination they have tested about 86B. Last exam they have asked exception to 86B. Now restriction on use of amount available in electronic credit ledger is what is given in 86B. What is that they're saying? They're saying this, I generally call this provision as ego provision of the government. Government is saying that I will make sure that these kind of fellows will pay something, at least 1%. Now if you don't follow this, your registration can be suo motu cancelled. You can have suo motu cancellation if there is contravention of this provision. What it says, it is applicable if you have a monthly more than 50 lakh taxable value. Monthly more than 50 lakh taxable value. Okay, then they're saying that if you have taxable value of more than 50 lakh, you should be paying some taxes, no? And if you're not paying, they said don't use the 100% of your, if you have so much of ITC, don't use 100%, you pay at least 1% to be paid by cash. So which means if my taxable value of supply is 1 crore, and my GST rate is 18%, which is 18 lakh. But I have a credit of how much? 20 lakh. Can I use this entire amount of 20 lakh credit to set off my 18 lakh liability? No. Out of this 18 lakh, only 99% you can set it off with your input tax credit. 1% you will have to pay by cash. 1% of 18 lakh would be what? 18,000, right? Okay, so 18,000 you pay by cash. It's not a lot of amount, but government says that I'll make sure that you pay. But it's not required if you have paid more than 1 lakh in income tax each year. Received more than 1 lakh GST refund, so it's a genuine case. 1% on cumulative basis you have paid, which means on that yearly from April onwards, if I recompute, you have paid more than 1%. It is not applicable for government, public sector undertaking, local authority, statutory body. These people are not going to be pushed to pay the payment of taxes. Okay, this is from payment chapter. I will come back to this after I look at payment chapter. So that's it for our return chapter. Let's quickly go and look at payment. So there are 3 electronic credit ledgers maintained in common portal for every registered person. We know that it is electronic liability register, electronic credit ledger, electronic cash ledger. Now, electronic liability will show all the liability, credit has all the credit, but you can only use credit ledger to set off taxes. There's a clarification on this which is going to be very important for you. So let me quickly go through that provision for you. It's there in your right after your return chapter. This topic is given. So we'll go through that now. Okay, this is there in your page number 125. I would recommend that this time, if they want, since it's an amendment, it's a good area for a 2-mark question. Okay, let's look at this. Clarification on utilization of credit or cash ledger. Electronic credit ledger can be utilized against any output tax liability, including any tax payable due to any proceedings under GST law other than tax payable under RCM. What's the change here? We know that we can use electronic credit ledger only to make tax payment. Okay, so we thought that so far, when I say tax payment, it means only tax payable by using your returns, which means normally tax payable by doing a self-assessment. What if the department makes an assessment, send you a notice? In that notice, they said you have to pay this much of taxes, 1 lakh rupees taxes you have to pay by a proceedings, a court order, or you have actually had an assessment and then they have issued an order to pay this much of taxes, interest and penalty. Can I use, this is an outward tax liability only but came through a proceedings. Can I use electronic credit ledger balance to make the payment of tax payable by a proceedings also? Yes. So you can actually use your credit ledger for both output tax liability by normal assessment, your own self-assessment, also any tax payable by proceedings. So 2 of them you can use your ITC, but you cannot use for RCM liability. That's the difference now. It cannot be used for RCM liability. You know that RCM needs to be paid by cash, but after paying you can take the credit. Okay. So nothing to worry. I don't know your name. Your name looks different, but then yeah. So there's nothing to worry. You have to trust your instinct. I told you that for theory, look at RTPs. Look at all your previous RTPs. What are the theory questions they have given in the RTP, and that's what is repeated in last 2-3 exam. Just be, go and look at those theory. And in an examination, I'm just answering the question that I'm seeing on the chat box. So there is no need to be anxious about it. In an examination, I would always prefer, out of the 3, only 1 would be theory question, right? Like the last question. You attempt theory only if you don't know the answer for the first 2 practical questions. Because it's an optional, if you know the practical question answers, write that. Because that's going to carry you more marks. If you are confused about one of those practical questions, or if there's a new question comes in, you're completely, bamboozled by that, then you try to go ahead and then with theory. And in case of theory, whatever is there in our notes is more than sufficient for you to write, but write it as sentences so that they'll pick it up from there. Okay, there's nothing to worry in terms of theory, what kind of question comes in. You will always have an option, you will reasonably able to answer. Then, can I use my electronic credit ledger to make the payment of interest, penalty, fees, etc., or a refund I have received in cash? No, you cannot do that. But can I use my electronic cash ledger for any of those? Yes. Okay, so this is something that they can test, because they said even a tax by proceedings can also be paid by using electronic credit ledger. Electronic cash ledger to be updated on the basis of e-scroll. So if the payment is blocked, okay, because of some bank failure, RBI will create something called as e-scroll. By using that also, your electronic credit ledger can get a credit of your GST paid. That is the additional identification that they have given. Now look at this. Section 44, what it says. Amount available in CGST head of a person can be transferred to IGST, SGST, UTGST and cess of him, or IGST or CGST head of a distinct person. This is also an amendment, can be tested. This has been tested in like 2 examination on a different context. Now we will try to understand this with an example also. They also said GST can now be deposited by UPI and IMPS. Okay. Now let's look at this with our understanding. Let me give you the context. So in Challan, when you are filling, so the Challan is the form that we use to make the payment. Now while you are filling Challan, you have something called as major heads and minor heads. Okay. Every major head, what are the major heads? CGST, IGST, SGST, cess, these are called as major heads. Each major head will have 1, 2, 3, 4 and 5 minor heads. Tax, interest, penalty, late fees and other. All of these are called as minor heads. Now I made the payment by filling this form, but I wrongly filled in one of these. Can I transfer to the another? Yes, you can do that. So that is now possible by using a form called as PMT09. This was tested in the last exam as well. They have asked this question. Can I transfer from one major minor head to another major minor head? Yes, I can do that. Use PMT09. Now there is an additional update on this. What is that additional update? Okay, I'll show you an example to understand that. Look at this. Mr. Raju has 2 branches. One is in Kerala, another one is in Tamil Nadu. So Raju has 2 GST numbers, one in Kerala, another one in Tamil Nadu. So I'm not talking about credit ledger, I'm talking about cash ledger. Raju deposited 10,000 rupees in electronic cash ledger in CGST head as taxes. Now, it was a wrong deposit. He wanted to use it for SGST, S and IGST. That's what he should have deposited. Can he transfer from CGST to the other heads? Yes. Now I'm talking about 001. Within 001, can he transfer? Yes. So you can transfer to another major head or another minor head of CGST itself instead of taxes freely by using PMT 09. Now there's an additional change. What is it? They said, Raju, you have one more registration, right, in Tamil Nadu. If you want to transfer from electronic cash ledger of 001 to 002, your own registration in Tamil Nadu, you can do that. But you cannot do it to all the other heads. You can do it from CGST to CGST of Tamil Nadu or IGST of Tamil Nadu, not SGST. This is now allowed. This is what, is it set off? No. This is from electronic cash ledger in one registration to electronic cash ledger in another registration of the same person. Now that is allowed. Are you guys understanding this? If this is clear, can I quickly have a yes from all of you? There's an amendment, so you have to be careful. Now let's look at interest. That's also an interesting area to look at. I would recommend you look at interest also with respect to page number 124. Section 50 has been updated. Section 50 talks about interest on delayed payment of taxes. Now you have section 50 interest on delayed payment of taxes to be understood in two different methods. One is a general case, another one is, now you have an additional case that is available. Okay. Now the first one is general cases. The rate of taxes is 18%, rate of interest is 18% generally. Now they said, if your 50 subsection 3 is been updated, and they said if you have wrongly availed and utilized an ITC and the government finds it out and government is asking you to repay this ITC, you can pay interest up to 24%. Currently it is notified as 18, but it can go up to 24%. This is an amendment. Okay. Now normally it is 18%. Even in ITC, but then they have used the word what? Wrongly availed is not enough and utilized. Okay. Now let's look at the first one. Now when you generally delay in payment, so what is the due date? You are under normal scheme, your due date is 20th of next month, right? If you pay beyond 20th, then if you pay beyond 20th, then you have to pay for each day of delay an interest. Now the question that we have here is, the rate is fixed 18%, no doubt on that. The question we have here is, should I pay interest on net liability, that is outward tax liability minus input tax credit, or I have to pay GST on the gross liability? The answer is depending upon whether you filed 3B on time or not. So they said 3B is filed within the due date. Say for January, if I file 3B within the due date, if the answer is yes, if the answer is no. If you have filed 3B within the due date, then you missed out to declare one invoice. Suppose for January month, I filed 3B on 20th of February, but I forgot to include an invoice worth 1 lakh. I am including this invoice only in the month of March. Now on that 1 lakh invoice, there is 12% GST that is payable, that is 12,000. Should I pay interest on this 12,000 now? Yes. That is on gross liability. However, if I am actually delaying the whole 3B, so January 3B has a net liability of 50,000, but I did not file it on 20th of February or made the payment on 20th of February, then I have delayed it for 5 days. I made the payment on 25th. There is a 5 days delay. Now, if there is a delay in filing 3B, whole 3B, then it is not a subsequent declaration of an invoice. If it is subsequent declaration of an invoice, you have to pay taxes on gross liability. But if you delay the entire 3B, then you will pay interest only on the net liability. This was a clarification not yet tested. So we had two questions also given in our notes, in our practical notes. That questions are important for you to look at. Now this net liability means on 50,000 you will pay interest for the number of days of delay. How do you compute the delay? Due date till the actual date of payment. That is same for all. Okay. Now what if ITC is wrongly availed and utilized? They said you have to pay interest from the date you have utilized the ITC till the date you have reversed the ITC and paid it back. Now there is an assumption that we have there, which we said we assume to be utilized provided your electronic credit ledger balance falls below the ITC wrongly availed. I'll tell you what it is. Say I have a wrong ITC. Suppose I have a motor vehicle I have purchased and I have credits of 1 lakh, which is a block to credit, right? If I purchase a motor vehicle, but I have taken this credit. Now after I take this credit and do all the set off, I still have 1,50,000 balance left in my electronic credit ledger, which means this 1 lakh is not utilized. But I don't have 1,50,000. Instead, I have only 50,000 left in my electronic credit ledger, which means that out of this 1 lakh, I have utilized 50k. So now I have to reverse 50k with interest. Are you understanding? So if my wrongly availed ITC and my balance in electronic credit ledger, if the balance in electronic credit ledger is less than the ITC wrongly availed, it is assumed that I have utilized the ITC and I have to pay interest. That is the understanding on payment chapter, important areas. Now let's look at charge chapter. I'll also tell you what are the questions that you have to look at. If you find some time, you are practical notebook now, so our question bank, our practice manual, if you could glance through on questions on both of these chapters, it will actually be adding a lot of confidence. It will only take you almost an hour to go through all the questions on procedures. Wouldn't take more. Do not practice the question now, just look at question and answers, just glance through and then remember, okay, this question comes in, this is the answer, this question comes in, this is the answer. Also for theory that I've already told you, look at RTPs without any missing out. I've already have all the RTPs for the last 2-3 RTPs. Everything is there in my YouTube channel. Just ensure that you look at all those videos. If you are having any confusion, look at the respective question. I would have already solved it in one of the videos. Now let's look at charge. Also, I wanted to tell you one more additional thing. So I hope you guys have gone through the liquidated damages. There are like 6-7 areas there they have clarified. Also the no claim bonus. There's another video that I have done for Ernakulam branch of Students Association. I've done RTP and those two amendment discussion, 37A and no claim bonus. I've done liquidated damages also there. Please ensure that you go through that. Okay. If you don't want the video, ensure that you go through. The topic is there in supply chapter. No claim bonus is there in supply chapter as well as in value chapter. So you have to go through that because it can be tested. I'm expecting there could be a new question that they can frame out of that. And it comes out as like first question. If you've gone through the video, it'll be great. Like, I hope you have the video. If you don't find the video and all that, text me. You have my WhatsApp number, right? Like, I'll give you the link. Okay. A quick recap on composition levy scheme, a 15 minutes recap I'm thinking of. I can go on and then do this in 10 minutes also. It's not very difficult area to look at. 5 things to discuss in composition levy scheme, right? Like 5 things. 1, advantages, eligibility criteria, person, what are the conditions to be satisfied, person not eligible, procedures. Then you have marginal service scheme, you have 10-2A. Okay, this is it. But practical questions can come. 5 marks, 6 marks, they can shoot any kind of complicated question. So, our examples are all very important, but I'm pretty sure that you would have got the concept right. It's an option. Advantages is that you file financial year return, quarterly payment. Payment is on or before 18th of subsequent month from the end of the quarter. Return is only GSTR 4. CMP 08 is payment. Okay, so return is a financial year return, that is 30th of April. I also told you yesterday that 3 months from end of the financial, if you don't do it, like Siomoto cancellation can come. There is no 9A annual return now. Tax rate is super low. Manufacturer 1%, trader 1% on taxable turnover, but all these turnovers are on a state level. Restaurants 5%, so not many restaurants would offer this, but in service only restaurants can opt. Eligibility criteria, if you are under normal states or if you are under Satnam 3, Satnam 3 has a 75 lakh previous year turnover limit. If you are under normal or general category states, your turnover limit should be less than 1.5 crores. What is the basis? Aggregate turnover is the basis. What comes under Satnam 3? Very similar to registration. It is Sikkim, Arunachal, Tripura, Nagaland, Uttarakhand, 3M, all of them are in Northeast, Meghalaya, Manipur, Mizoram. Now, aggregate turnover definition is something that you will have to 100% remember for your examination. Turnover on all India basis, which includes taxable supply, exempt supply, export and interstate supply, excludes GST and cess and tax payable under RCM. So, if tax is payable under RCM, the turnover will be the turnover of the supplier, not the recipient. Again, I'll repeat, even if the tax is payable by the customer, the turnover should be added to the supplier. Say I make a supply, my customer is paying tax under RCM, it's my turnover, not my customer's turnover. That's the understanding, period. Now, interest. Interest is an exempt service. Interest need not to be included in the turnover for any computation in CLS, but you include interest in turnover computation for registration. 3 conditions to be satisfied. Number 1, supplier cannot collect tax on supply from recipient. Number 2, supplier is not eligible for ITC on inward supply. Number 3, he cannot make any interstate outward supply, interstate purchases are okay for him. He cannot opt to this vertical wise or segment wise or branch wise. You have to either go for all the branches or go for no branches. Okay, so choice is on a PAN level. We have discussed this in QRMP. You can do this choice on a GST-IN level, but for CLS you can only opt this on a PAN level. Okay, this is the understanding. There are multiple persons who cannot opt for this. Casual taxable person, non-resident taxable person, person supplying through e-commerce operator, manufacturers not traders of pan masala, tobacco, ice cream, aerated waters, there's a bunch of them. A person making non-taxable supply like alcoholic liquor for human consumption, HP man, supplier of service other than restaurant. So, who are those people, who are the manufacturers who could not opt for composition levy scheme? So, there are 8 of them. Manufacturers, only manufacturers, okay, traders can. Manufacturers of PTI, pan masala, tobacco, ice cream. Aerated waters, then bricks and blocks, there are 4 of them. Fly ash bricks, fly ash aggregate, bricks of fossil meals, building bricks, earth and roofing tiles. Last November exam, they have asked about fly ash bricks. The same question, 2 marks. Now, please note, in supplier of service, only restaurant can opt for composition levy scheme. But what is the additional point that you have there? They said, if you are a supplier of goods, like you are a trader or you are a manufacturer or you are a restaurant, You want to provide some other service, be it technology service, maintenance service, repair service. You can still opt for composition levy scheme. Your main activity is trading, manufacturing or restaurant. You have one more service, it's okay. Provided your service value has to be marginal service limit. It should be less than the marginal service limit. Then the next question is, what do you mean by marginal service limit? It is 10% if your turnover is above 50 lakh, or 5 lakh rupees if your turnover is less than or equal to 50 lakh. So 10% or 5 lakh, whichever is higher. So if your turnover is up to 50 lakh, 5 lakh will be higher. So which means if my turnover is 40 lakh, I can have 5 lakh of service and still opt for composition levy scheme, pay 1%, that same tax rate on the entire turnover. And if I am somebody who's having turnover of 60 lakh, I can have 6 lakh of service, still opt for composition levy scheme. This is the relaxation that they have given by issuing a proviso. We call this as marginal service. Okay, there are questions that they have drafted on this alone. Now, while computing this service limit here, don't include interest as a service. Okay, interest in no computation we will include. That's the another additional understanding that you can have for this. Now, there is something called as 10(2)(a). Why 10(2)(a) came is that, what about an IT company? What about a chartered accountancy firm? What about a saloon? Can these people opt for composition levy scheme? They cannot, because in service, only a person who can opt for composition levy scheme. In service, it is only whom? It is restaurants. So these people need to have some kind of a scheme. So they said, we will introduce a special scheme for an IT company, a chartered accountancy firm, as service form. So in examination question, you should always identify wedding photographer, repair guy, saloon. All of these people are actually supplier of service. They cannot go for composition levy scheme. When I say composition levy scheme, it is in examination you can use for composition levy scheme. When I say composition levy scheme, I mean like 1% and 5% scheme. No, that you can call it as 10(1) and 10(2). And 10(2)(a) is for services, or you can write it as concessional rate of taxes under 10(2)(a). This kind of words can be used. Please understand, these people can opt for, or people who are having marginal service beyond the limit, these people can opt for 10(2)(a). What is the additional condition that they have to satisfy if they want to opt for 10(2)(a)? The additional condition they need to satisfy is that their turnover should be below 50 lakhs. Again, please note, their turnover should be below 50 lakh. Okay, so they have an option to go for 10(2)(a) if their turnover is less than 50 lakh. What's the advantage? What is the tax rate that is applicable? You don't get the same 1%. Instead, you get like 3% CGST, 3% SGST. They can only make intra-state like other composition levy scheme. So it will be always CGST, SGST. So in composition levy scheme computation, I'll recommend always write it as CGST, SGST. When I say 1% composition levy scheme, you should always keep it as 0.5% CGST, 0.5% SGST. Now, when I say 6% rate for services, it means that 3% CGST, 3% SGST. Then, what are the conditions to be satisfied for you to take this? It is the same ditto conditions. What are the 4 conditions? You can't get the 6% from customer. Whatever inward supply you pay taxes, you don't take ITC. You are not allowed to take any inward. You are not allowed to make any outward supply which are interstate. Purchases interstate is okay for you. Interstate outward supply is not allowed. You cannot opt this branch wise. Okay, business vertical segment wise not possible. Okay, same conditions. Then, who cannot opt this? Same ditto fellows cannot opt. Who are they? CTP, NRTP cannot opt, person supplying through e-commerce operator cannot, manufacturers of all those goods cannot, person making HP man, like non-taxable supply, alcoholic liquor, all those people cannot. Say a restaurant with an alcoholic liquor cannot opt. Likewise, this also cannot be opted for by those kind of people. But supplier of service could not opt CLS, they can opt for this scheme. Now special points, there are multiple questions on the special point. Now the number one we already know, in 10-2A also while making any computation I don't include interest. Simple straightforward point, right? Now this is where they are asking question. If the scheme is opted in the same year in which registration is obtained, turnover till registration no GST, registration to total financial year turnover up to 50 lakh concessional rate and beyond 50 lakh normal rate. This understanding can be even given to composition levy scheme. If I am opting this in the same year in which I am taking registration, up to registration I anyway would not pay any GST, and then you have to look at the turnover, no? For 10-2 I will look at turnover for 50 lakh, and for composition levy scheme I will look at turnover for 1.5 crores or 75 lakh. While computing this turnover I should include my turnover before registration also. That's the understanding. Okay, let's try to understand this with an example. That will be the better method. If that comes, it comes for like 4 to 5 marks as a question, computational. Raju started a saloon. He cannot opt for 10-1, 10-2 because he is a supplier of service. He went for 10-2A. He started his business, he did not take any registration. So from 1st July he started his business, he is unregistered. His turnover became 20 lakhs, he is applying for registration. So for the first 20 lakh turnover, he did not pay any GST. From that turnover of 20 lakhs till next another 50 lakh, can he go for 10-2A? No, he can go for 10-2A because his previous year turnover is 0. He can go for 10-2A for another 20 lakh is already over, another 30 lakh only, because cumulatively it can only be 50 lakh. Understanding? Okay. So after says 31st of December he has crossed that 50 lakh limit. Beyond that he will have to pay normal rate of taxes. Okay, so the first 20 lakhs no GST, then next 30 lakh 3% CGST, 3% SGST. Beyond that it is 9% CGST, 9% SGST. This is the special point. This can even be applied for composition levy scheme. I opted composition the same year in which I am taking registration. Till registration no GST. Total turnover up to 1.5 crores. That additional turnover after say 40 lakh is the goods limit. After 40 lakhs I took registration. So for the 1 crore 10 lakhs, that balance of 1.5 crores, I will pay taxes at 0.5 CGST, 0.5 SGST. Beyond that I will pay normal rate. This can also come for that. Procedure is pretty straightforward. You have to put it on public notice, put it on signboard that you are a composition taxable person. If you are already a registered person, you can only opt it before start of the financial year. But you are a new registration, in registration form itself you can opt as composition levy scheme. You can withdraw during any time, or you breach any condition, you will have to automatically go for withdrawal of the scheme. If you were not eligible and you took it, you are liable for 73-74 penalty. It's called irregular availment. That's it for composition levy scheme. I hope that revision is useful for all of you. Now let me go to charge. What are the reverse charge cases under 9 subsection 3? Now there are two reverse charge sections that you have. Okay, there are 2 reverse charge sections. So these are the 2 sections which talks about RCM 9.3 and 9.4. Let me make first difference between 9.3 and 9.4. 9.3 is specified case of RCM, 19 cases notified. In 9.3 notified cases, supplier may be registered or unregistered. In 9.4, it is only applicable in a notified case, only one notified case of real estate, and supplier has to be unregistered. Like, in real estate cases, if they make purchases for residential, project. Okay, so residential project, if they make purchases, their purchase has to be 80% from registered person. Any shortfall, they pay tax under 9.4. That's the only notified case. But 19 cases of 9.3 is what is most important for your examination. Anywhere, any question can come. They asked last exam question, who are those specified persons also. So it's a straightforward questions. These are the 9.3 notified cases. So there are 2 notification numbers. I used to tell this 100 times in classes, but again I'm repeating it for you. In tomorrow's examination, please write 2 notification numbers. Notification number 1, notification 12/2017. 12/2017. Any exemption question, just mention those wordings. As per notification 12/2017 of CGST Act. Now, any RCM, you mention notification 13/2017. These 2. Sorted for you? Okay, these 2 notification. Exemption 12, RCM 13. 2 notification numbers. So, some sections will automatically be there for you. Okay. What are the RCM cases? Insurance agent to an insurance company is under RCM. Now in banking, there are 4 RCM cases that we had. Recovery agent to bank, NBFC, financial institution. In case of direct selling agent, they said direct selling agent is a conditional RCM. What's the condition? The DSA has to be an individual, then only RCM will come. To whom? To banking company. Then business facilitator and business correspondent, we need to understand this properly. What it says. So this is a chart that you have to look at on the screen and then remember this. In case of business facilitated to a banking company, it will be under reverse charge mechanism. Business correspondent is a big entity. Remember, business correspondent as a big entity. Facilitator, correspondent, different. Business correspondent to bank is under FCM, not RCM. Agent to a business correspondent is under RCM. Remember this. Okay, this will sort you for that. But also remember, if any of them are attached to a what branch? Rural branch, it will be exempted. We have learned that in exemption chapter revision already. Then, next is sponsorship service. Now you have to look at for sponsorship service. Now how do you understand supplier and recipient? Always remember, the one who is receiving the money will be supplier. The one who is receiving the money will be always the supplier. The one who is paying the money would be the recipient. Now, in case of sponsorship service, the one who is receiving the money can be any person. The one who is receiving the money has to be, the one who is receiving the money can be any person. That's the supplier. The one who is paying the money has to be a body corporate or partnership firm for RCM to be applicable. Say, a company like Byju's pays some money to BCCI for sponsorship. Byju's will have to pay tax under RCM. Now, recipient has to be a body corporate or partnership firm. In sponsorship, the one who is paying, so always think corporate or partnership firm paying for sponsorship, they have to pay taxes under RCM. Now, in case of director, they said when a director of a company is paying money to body corporate being a company, body corporate has to pay taxes. So there is clarification on that also. This is the summary table that you have to remember. Okay, this is all from our workout batch that have summarized. I hope all of you guys who have been there in the workout batch will always have this thing with you. Okay. Now, managing director, whole-time director, executive director, these fellows will receive two things. One is salary, another one is fee. In GST, salary is not even a supply. So how do you identify when a director is getting money? How do you identify whether it's salary or it's fee? If it is salary, they would have told in the question that they are deducting TDS under section 192 of Income Tax Act. If the TDS is deducted under 194J, it means that it is a fee payment, it will be taxable, it will be taxable under RCM, the company has to pay. For which directors? Managing director, whole-time director, executive director. But if they are an independent director, they'll only receive fee because they're not employees. And that will be taxable under GST because the TDS will be under 194J and taxes payable under reverse charge mechanism. The company has to pay. Now there's a note that I've given there. Service by directors other than the capacity of a director. Now I'm a director in a company and I provide some service which is not in my capacity of director. Like say for example, I'm giving a commercial building rent to the company. I had a commercial building, I have rented it to the company. Now for this renting, will I have reverse charge applicable? No. This is not done as a director, not in the capacity of director. So there's a service by director other than the capacity of director, like renting of commercial building to the company will not be chargeable under reverse charge. It will be taxable because commercial renting is always taxable, but it will be under FCM, not RCM. Now GTA. Now they have specifically said now GTA who's not opting for forward charge. Earlier we had this provision, we said like GTA can actually be under forward charge or reverse charge. If they are under forward charge, they will opt for a tax rate of 12%. Now they have like forward charge rate can be anything. Okay, you have forward charge multiple rates. So they said those GTA who's not opting for forward charge, they provide services to a specified person, then specified person will pay taxes. This is the understanding that we have now. Okay. Now the supplier is GTA providing services to a specified person. Now the specified person will have to pay tax under RCM. Now the GTA should not be opting for forward charge. Who was this specified person? Factory, society, cooperative society, body corporate, partnership, any person registered. Okay. So if the recipient is anybody other than the specified person, it will be exempted. That's the understanding that we had for GTA cases. Always remember GTA recipient. Now there was a question that was tested in the last exam. So what if the specified person is not registered? Will it be coming under RCM? Yes, because only the last branch of specified person says that any person registered. A body corporate, partnership, factory, society and all, even if they are not registered, they will still become a specified person. RCM can still come. Advocate we have already discussed. Arbitral tribunal we have discussed. Government we have discussed in the previous one. Renting we have already discussed. Next, music composer, photographer or artist or the like, they are transferring or giving use of their copyright to a music company, it is under RCM. Now author providing their copyright to a publisher has to pay taxes. But there is a slight change there. They said author is given an option. What is that option? Author, if he wants, he can choose to pay tax under FCM. Now once he choose to pay tax under FCM, he can take ITC. He will have to bill the publisher with the GST, give a tax invoice. He cannot opt out of this. He has to give a declaration. He cannot opt out of this within 1 year. That's the additional condition to remember. Now RBI services provided by RBI to RBI, all are taxable. All are taxable. Now that's the first change. Now RBI is getting services from an overseeing committee member, then it is taxable under RCM. RBI will have to pay tax under RCM. Now security, okay. So disposal of security, that means sale of security is neither goods nor services, no GST. But I'm a broker, I'm facilitating transaction in security, it is supply of service, it is taxable under forward charge. But if I am lending security and charging something for that, it is taxable under RCM. The borrower has to pay taxes. So ICICI giving security to SBI, SBI will take taxes. It is taxable. Now security services, when I say security service here, it means supply of security personnel. So they said anybody other than body corporate. Say for example, I'm an agency who is supplying security personnel. I'm an agency. Now I'm supplying security personnel to whom? To a body corporate or a registered person. What kind of person? They said to a registered person. I'm not a body corporate, which means other than a company like an agency of security personnel who is run by an individual, partnership firm, HUF, whatever, other than a body corporate. They're giving security personnel to a registered person, like anybody who has a GST number. Now that registered person should not be registered only for TDS like government, or should not have opted for composition levy scheme. Then the tax is payable by the recipient who is a registered person. Like to give an example, TCS is taking 2 security personnel from a agency which is a partnership firm and paying 1 lakh. The tax to be paid by the TCS, not the agency. That's the understanding. Next is renting of motor vehicle, an important area to look at. I'll take our workout watch notes so that you get a little more understanding. So you have multiple provision on renting of motor vehicle. Please remember, last to last exam they have asked a lot of questions on that. There's an RCM provision, there's an exemption provision, there's an ITC provision. So I'll consolidate all that for you. Now renting of motor vehicle, you have 2 rates. Please note you have 2 rates like GTA. So you have 12% rate, you have 5% rate. Both of them can be under forward charge. Okay. So 12% is always under forward charge. So you charge 12% from the customer. You pay taxes, forward charge. What is that you're doing? You're renting motor vehicle, which is different from passenger transportation. Renting motor vehicle means I have a Swift car, I have rented it out. They are free to use it. Passenger transportation means I have Swift car, I'll tell you, you tell me the route in which you want me to carry the passenger, I'll do that. So here we're talking about renting of motor vehicle designed to carry passenger. I am charging for the cost of fuel also, but I'm giving you the vehicle, you can use it for anything. Okay. Now, if I'm going for 12%, no question of RCM. If I'm going for 5%, it can be under RCM or FCM. When it can be under RCM? So I have to ask the question, I have to look at what is the condition. They said the supplier should not be a body corporate, the recipient has to be a body corporate. So if it is under 5%, first of all, you won't get all the ITC. There's a restriction on ITC. Now, what will be under RCM? So you have to understand, if the supplier is a body corporate, it cannot be under RCM. So I am Rental India Private Limited who's renting motor vehicle. I have to, even if I opt for 5%, I have to charge it from the customer and I have to pay because I'm a company. If I'm not a company, I'm renting Mr. Lijil Lakshman, who's a sole proprietor, is renting Swift car. There's a chance that it can be under reverse charge. My customer might make. When I'm giving it to an individual also on rent, I'm giving to Infosys also on rent. Infosys will pay 5% under RCM. The individual will pay me the 5% I have to pay under forward charge. So if the supplier is other than body corporate and the recipient is a body corporate, it will be RCM. Recipient is other than body corporate, it will be under FCM. We already knew that renting of certain vehicle is exempt. I have already told you this. What? To a state transport undertaking, more than 12 passenger vehicle is exempt. EV given to a local authority more than 12 passenger is exempt. Motor vehicle given to somebody who's doing transportation of SSF to preschool till higher secondary is exempt. Goods transport vehicle given to GTA is exempt. I have told you in exemption. There's a block to credit provision which says that if I take a motor vehicle which are on purchases, if there is a blocking of credit, if I take it on rent, that's also blocked. So if I take a Swift car on rent and I pay taxes under RCM or FCM, as a customer, I can't take ITC because it is a motor vehicle meant for transportation of passenger, approved seating capacity less than 13. It's a block to credit. Okay, so that block to credit is there. Okay, so these are the provisions that you have to be very careful about. So that's it about the RCM cases. I hope I have covered reasonably, whatever I wanted to cover and go to a quick revision. And I don't want to, do a lot of stuff so that you get confused. Now I'll leave you to, go ahead and then do your set of revision. I'm available on chat too if you want to resolve any queries. Otherwise, that's it from my side, everyone. I'm wishing you really all the best. I'm praying for all of you. Really praying, okay? I'm really hoping that you have a great examination tomorrow. Just be very confident. You have done enough. Just go. Ensure that you write it with all your strength. You're not going to give up. You're going to be there in the examination hall. Start writing. Even if you don't know anything, you just have to think through and then make your best answers. There will be some new questions that will come in, but just apply. Ensure that you have all those working notes and everything that is written. Amendments are very important. Yes, I've already covered most of the important amendments, and I've also put out another just for Asta. I've put another question wherein I have another marathon where I've covered all the related amendments. There's one more amendment video that is available if you have not watched on my channel. I'm telling you, you can share this video to all your friends so that you can also, whoever wanted to just get this benefit, they can also have this. Okay. Amendments will come. Amendments are going to be super important. I've already covered those in another video in the marathon. Yesterday evening we had one. Whoever has attended would have already got those things. Others, it's available. All these videos will be available here in the channel. So I'm just going to keep the channel very active and then start interacting with all of you. Fingers crossed. I'm expecting the questions to be easy for all of you, and give your best, and that's all required. And don't bother about the results. Ensure that you give your best, and do not discuss the answers right after the examination. Just leave it there. You have to give your best, and that's all is left out for you. And all the very best once again from bottom of my heart. And I'm super happy that I could be part of your preparation journey. And I'm once again wish you all the best. So it's signing off from my side. Bye-bye.